Hello, and welcome back to our series, Vertical SaaS Fintech Disruption by a Thousand Cuts, sponsored by our friends at Pipe. The reason that vertical SaaS companies win is simple. They understand their customers better than anyone else, and that understanding suffuses every aspect of their products. That's it. That's the secret. However, as you'll hear in this episode, executing on a strategy of customer centricity is extraordinarily difficult to do. It requires extreme levels of empathy, rapid prototyping and iterative product development, pragmatism on build buy partner decisions, and the humility to not assume you always have a right to win. Luke and I were thrilled to be joined for this episode by Bryan Solar, Chief Product Officer at SpotOn. SpotOn is a vertical SaaS platform that focuses on serving the needs of independent restaurants. And as Bryan explains in our discussion, that's a mission that he and the team at SpotOn take extremely seriously. In this episode, we talk about product-led growth, the discipline needed to focus on specific customer segments, and what makes independent restaurant owners and operators different from other small business segments. It was a delightful and fascinating conversation, and I'm so excited to share it with you. So without further ado, here is Luke and I's conversation with Bryan Solar, Chief Product Officer at SpotOn. Okay, Bryan, thank you so much for joining us.
Yeah, so great to be here. Thanks so much for having me.
Absolutely our pleasure. To help us set the context before we get into the meat of this episode, which is going to be all about customer centricity, I was hoping you could start by level setting a bit on SpotOn, what you guys do, how the company's evolved over time, and your role at the company.
Sure, absolutely. So SpotOn started as a loyalty platform. It started as a way for folks to build up more data about their customers, their guests. Over time, it moved more into payments. It started taking payments from small businesses, and then it continued to evolve. And through both acquisition and some strategic choices, we started to cover a lot of customers, ranging from restaurants to retailers to airports to zoos. At one point, we had, I want to say, about 40% of all of the major league sports stadiums in the United States. One of the things I joined SpotOn 3 years ago, and one of the things that we've done over the last 3 years is really focus on a specific vertical and a specific type of customer. And so that customer is restaurants. We focused on independent restaurants. And one of the things that we've really obsessed about is not being a point of sale or kind of a smart cash register, but rather being a kind of comprehensive partner to that business, helping them understand their business, helping them run their business well, helping them get connected to the right third parties. That kind of holistic approach has been probably the biggest differentiator for us over the last couple of years.
Got it. So just you already kind of took us in the direction of what I wanted to ask you about, because like customer centricity is the focus of this episode. And it's really interesting to me that over time you guys had sort of broadened to focus on a lot of different verticals through acquisitions and different customer segments. But as you just said, like there is definitely benefits to honing in on the specific customer. And
Yeah,
so I'm wondering if you can elaborate a little bit more on sort of the why behind that shift
sure.
and why you decided to focus. And then specifically for independent restaurant owners, like why that segment?
Yeah, absolutely. So, I mean, one of the things that we talk about a lot at SpotOn is we'd rather be loved by a subset than liked by a lot of people.
Uh,
And when you think about product development, you think about kind of building for a type of customer. Um, I had a mentor once upon a time who told me that some people like hot tea, some people like iced tea, but no one wants lukewarm tea. Um, and and when you're building for all of these people, what ends up happening is you end up finding this like weird, like, oh, like everyone would probably be okay with that. And so for SpotOn, we had a lot of success with restaurants. That was an area that was of incredible growth for us. But also it was an area where, especially from the independent restaurant standpoint, um, we just felt like there was a kind of evolution that was happening there. Folks were moving from these legacy point of sales. They're trending towards kind of more complete stacks that involved a bunch of different people. And we thought that and we still believe that there's a big opportunity to pick a subset. And that for us is
Sure.
independent restaurants, and obsess about them
Okay.
and build products that are
Okay.
just for them, and not do that lukewarm tea that you end up, if you're meeting with the head of IT for Dodger Stadium, and then you're meeting with the head of a full service restaurant in Philadelphia, they want very different things.
Mm.
And so that's why we decided to say, hey, like, we're going to be great in this area. And it's paid off. We've grown pretty significantly since the POTUS.
It's so interesting that you describe it that way, because I was at Intuit and then at Square, as you know, for a while, and both of them I still think are really horizontals, right? They cannot do 100 different industries at once. And so like what you're talking about and like the decision you guys made independently really is the same theme that's happening everywhere. These horizontal platforms just can't serve the verticals well enough, right? Even, I mean, I had to put you on the spot on that one, but even at Square, like on the restaurant side, like maybe not been resourced well enough, maybe not focused well enough, because you can't get the broader organization to do the things you need to do to actually serve that specific customer type sometimes, right?
Yeah. I mean, and I think, as a parent, that they say that you're not supposed to have a favorite child. And maybe that's true for a parent, but as a business, you kind of have to. You have
Mm.
to say, hey, this is our producer, and they're going to get more resources, more focus, more priority. And Luke, to your point, the scenario where you're going horizontal, um, I think some folks have done it if they were able to be a platform, but when you're trying to be the kind of core stack, it's very, very difficult not only to build it, but also to build it for speed. Because we both remember the scenario where it's like I could ship this month if I'm building it for this vertical, but if I have to figure out how to make it work for a retailer and a plumber and a florist, well, that's going to take me 2 or 3 more months. And those decisions compound over time, and they deny the kind of growth that I think a lot of people need in terms of features.
Yeah, no, I mean that sounds exactly right to me. And I guess one last thing on SpotOn's kind of target customer base that I'd love to drill into, and we're actually planning to do this for every episode in the series because vertical SaaS as a category just kind of fascinates me. But take us into the world for a second of independent restaurant owners. I mean, as you're talking about the value of being able to serve hot tea to someone who likes hot tea is that you know very precisely exactly what temperature they're looking for and the little quirks about what they want that no one else understands. What's one or two examples of like very subtle, specific things about independent restaurant owners that those of us on the outside might not realize?
I think maybe like the biggest thing that if you have lived it or you have a family member that's lived it, uh, there's this perception that because you eat out, you understand restaurants.
Mm,
And I think the thing that's so interesting when you really really live it and you sit in the back kitchen or sit in the back room, um, margins are incredibly tight.
yeah.
People are working their absolute tails off to make 3 cents on a dollar.
Hmm.
And so I think one of the things that people maybe don't intuit based on just kind of having eaten out was
Hmm.
that there's 1,000 micro decisions that make the difference between whether they survive or not. And so many restaurant owners, they don't value their own time. So like, oh, I'll just work another 10 hours or another 15 hours. And
Right.
when you're working 120 hours a week or 130 hours a week to fulfill your dream, which was to be the best Mexican restaurant or the best bakery or whatever, it was
Hmm.
not to like, I am going to optimize my prime cost by by doing X and Y. I think that's the part that people don't get, is that it's a really really hard job where survival has almost nothing to do with what people perceive, which is do you make a good X?
Mm. That's really interesting. And just to maybe double click on that, and Luke, jump in here because I know this is sort of thematically something that's come up in some of our other discussions. But, it is really interesting this distinction between, for a small business owner, particularly, what they love to do and how they think about solving the problem from the perspective of like, this is my craft versus what they need to do in order to survive and to thrive as a business. Right. And like those two things are not always exactly the same. And I could imagine that to your point about that independent restaurant worker, like they know how to work hard and they know how to deliver a delicious meal. And I could imagine it would seem like, well, if I'm not doing well as a restaurant, like these are the things I need to double down on and do even more so. And by contrast, like no independent restaurant owner got into the business because they like balancing the books at the end of the month or thinking about which payment processor to use. Like they didn't get into the business for those reasons. And as such, I would imagine those are maybe under optimized areas relative to other parts of the business. Is that a fair assumption?
I
I
think
mean,
that's for you, Luke.
I can answer it like more generically or generally, but I was a busboy at a restaurant in Austin, Texas, and then ended up being a waiter, and like really bartender for most of the time, like bartending for banquets, for weddings, at Shoreline Grill, actually, down by in the Four Seasons Hotel. But it's super hard work. I was carrying like 40 to 50 pound trays upstairs back to the kitchen like 80 times a night. Right. It's like, that's hard work. And like, just
Mhm.
like standing there serving drinks, like as fast as you can and stocking the bar. That's hard work. Like that's the front office side of it, but the back office side of it, my experience at Intuit and at Square is all of the pain points are very similar. And on the financial services side, right? Like access to capital is the number one pain point. Spending time like organizing the invoices you have to pay, understanding them, like paying those bills, like that takes a ton of time and people just don't have good tools to do that. The verticals are adding those tools over time now to where you actually can just receive an invoice, take a picture of it or forward the email over, suck the data out, set it up for payment, make the payment. Like all that stuff can be automated, where it took at least one human, kind of the restaurant manager, sitting in the back office doing a bunch of stuff manually. That should be changing rapidly. And I'm sure SpotOn is focused on this stuff too, but like we have a ramp like experience for micro merchants, right? You can't get a ramp card unless you have 200,000 cash in your bank account. Most of these restaurants don't have that, right? Like they just can't get access to this stuff. But to get those amazing features that just save you time, let you spend more time like experimenting on your menu or just like hanging out with your family. Like when all the financial services stuff comes together with the SaaS vertical stuff, like that's where the magic happens. And you just finally have more time to do stuff. Like that's how I think about it. But like specifically to restaurants, you know that space way better than I do.
Yeah,
Right.
I mean, one of the things that we do is we ask every person who works at SpotOn to adopt a merchant. Um,
Hmm.
and it's one thing to have like a one-time call with someone. It's another thing to like my adopted merchant. I will go and work shifts at the bar. It's a
Hmm.
bar in town, and I think when you start really, really internalizing their pain, I think that's when you can build much better product. Like I'll give you an example. There's a button that you had to unclick if you did a specific type of order type. And if you're doing it in a lab and you're doing it, by yourself, like, yeah, it's okay. Like that's not a big deal. But when there's 30 people belly up on a bar and you are
Hmm.
scrambling and it is crunch time, the game is on, people are starting to get upset. You start cursing under your breath, like, how dare they? How dare
Uh,
they keep this button here? Like it's not adding any value. And so like that type of stuff, I think feeds into the customer centricity, right? Which is like,
mhm.
I'm now, my favorite thing that happens with some of our product managers and designers is when they start naming problems by people. Like this is Frank's problem. Frank at that
Mhm.
bar had this problem. And like, that's when I know that we're like really starting to feel what they feel.
Yeah.
And just think about the revenue impact. If you can
Oh,
serve
completely.
like 3 extra drinks an hour, like that adds up dramatically. Like every bartender can serve 3 extra drinks per hour. Like that's like you can't have any delay in the process come from the technology tools you're using. It has to just be instantaneous. If it's not, you're costing the money, right?
For costing them money, costing that server tips.
Yeah.
And the last thing that we want to do is cost that customer an experience, because like they have a bunch of choices where they can go. And when they get that drink quickly, or they have that server who's not stressed and is willing to hang out, that's a better experience.
Yeah, absolutely. So I want to talk a little bit about right to win, right? So obviously, again, you've honed in on this specific segment and the specific customer type within this segment. I'm curious about how you think about your right to win as it relates to different features or different problems that you want to potentially solve for those individuals, as you said, right? And I know that, in the past, you guys have acquired companies or products to
Yeah.
help with these areas. I imagine you build a lot as well, partner. How do you think about kind of navigating this question of like where you have a right to win and where you can ensure that your product is kind of remaining best in class?
I mean, one of the things that you'll hear in SpotOn a lot is this idea of low ego, high impact.
Mm,
And so I think one of the things that's really interesting about the space is certain players have increasingly said, we're going to do first party everything.
mm,
And we're going to do first party everything. And we're going to kind of jam it down their throat. And, so what if we don't have the best X? Like we have it, and we'll make it, kind of an unfair advantage if you use our thing versus the other thing.
mhm,
And one of the things that I believe, so I have 8 aunts, uncles, and grandparents that ran a restaurant. And so when we're making decisions, I literally think like, if my Aunt Laura was on the other side of this decision, or my Uncle Joseph was on the other side of this decision, what would we pick? And I think that um, it creates a different type of mindset
mhm,
where there are places where I feel like we must win. Like we must be really, really good at helping them run a good business. We need to be great at reporting. We need
mhm,
to be great at helping them get those orders through. We need to be really, really reliable so that they never have a break in service. And then there's things that they need that, like, maybe we could do it, but we don't have to. And
mhm,
if we did it, unless we were going to be the best, unless we were going to be great at it, I wouldn't want my Aunt Laura to have a suboptimal experience because we wanted to pick up an extra $3 a month or something. And so that's where, we call it best in class over built in house.
mm.
That's what we're shooting for.
It's interesting if I just do like a simplified version of what you thought the core right to win is. It's customer centricity, which is what this episode is about. Like, go talk to them, understand the pain points, and fix them, right? And then be self-aware enough to know that maybe going and building your own lending business may not be the best idea, and go find somebody else who's best in class to go serve that thing, because it is a very difficult thing to do. Like that's I think an example close to home for me, right? But it makes a ton of sense. Like, focus on the vertical stuff. And if there's something else ancillary that the customer needs, but you don't have expertise in, then partner by all means. Right.
Yeah. I mean, whatever's the thing that we know they need the most, can't build everything at the same time. So
Mm.
like focus on building the thing that you know that they need and they can't get somewhere else. And then to your point, find ways to bring that value sooner.
Well, and I guess just double clicking into that for a second, Brian, I'm curious about almost more from like a internal team culture perspective. Like, how do you foster that self awareness? Because I think the slippery slope with vertical SaaS and with embedded finance in particular is, you know, you have a really strong built-in distribution advantage, right? And so
Yeah.
you can win, sort of in quotes, without necessarily having the best product just because you have such a captive group of customers. But at the
Yeah.
same time, as you're saying, like anything we're offering that's really not best in class or where we can't really have a demonstrable advantage over other options they could get, we are degrading that experience. To go back to your analogy, we're making the tea slightly more lukewarm, right? And so like how do you maintain that discipline with the team to make sure like we're being diligent and we're being self-aware about what we're best in class at and what we're not?
I mean, I'll give you an example. We have a feedback product, for example,
Mm,
and we built it in house. And I think for a very core number of customers, what they value the most is like, can I get an affordable feedback solution? And I don't need to go super deep and blah, blah, blah. I just need to cover like this basic layer. And we can offer them that solution.
mhm.
Now, when they want to cross segment it by demographic and all this kind of like crazy stuff, then it's like, hey, like we know that is a next level, and so making sure that we are presenting the options as almost Lego pieces. And there are, just to be clear, like there are a bunch of times where us building it first party is actually the right thing to do.
Sure, yeah.
Um, but there's also a bunch of times where people want different flavors of things. And if
Mhm.
you want hey, I got my money tomorrow, or hey, like this was a risk that, person A probably wouldn't have taken, but person B has enough data that they could take that risk. Like that is us adding value by having low ego,
Mm.
by like bringing in a partner and saying, hey, like we got you here, but if you need this, they got you there. Just making sure they have that mentality. And
Mhm.
um, I think at the end, it all comes down to if everyone is making the decision that like one of the interview questions that I ask people is, how are you going to fall in love with our customer?
Mm.
Because if you fall in love with our customer and who they are and like how hardworking they are and how much they deserve to win, at 11 p.m. when no one's looking, you will make the right choice for them. And that's, I think, a big part of how we keep that culture,
Mhm.
that people will do the right customer centric thing.
I love that you're working shifts in the restaurant. It's like Dara at Uber going and doing some drives like for
I am
weeks on end to see what's going on. Like, but doing it not just at the highest level, like all the way down the org as far as that, like try to do it 2 or 3 layers down would be amazing. And then like you're forcing, I hate to say it, but you're forcing empathy. Like you're gonna really understand what's going on if you're in the
Mm.
shoes actually doing the thing. Right. So like I just happen to have a crazy background where I have bartended and I have like carried heavy ass trays upstairs over and over again. I also like on the like plumber or electrician side, like we have another partner on that side. Like I climbed up in attics when they were 140 degrees in Texas as an electrician's helper when I was 16 years old. And I drove the truck to Granger. Like you build empathy over time with different businesses, and there's very different things in each of those. It's gonna like help you build different empathy. And there's no way a horizontal platform could ever do that, right? Imagine Sasan trying to figure out how to follow home 100 different industries at Intuit, for example, or Alex Chris at PayPal. Like he does a great job. He knows this. He knows he wants to go figure out his customers, but there's such a broad swath of customer. He'll never be able to do what you get to do by going and like literally working a shift in a restaurant. Like that's magic. I just want to emphasize that. It's awesome.
it's also really humbling. You walk in there and you're like, God, I am so sorry. I don't do this all the time. I do not know what Belgian beer you just asked. I can't find it anywhere.
Yeah. Oh man. Yeah, no, it's really interesting, and I'm curious sort of how you think in your role as chief product officer kind of about the connection between acquisition, product, and retention, right? Cuz I would imagine that, and we're going to have future episodes that delve even more deeply into kind of the go to market side, but from a product perspective, I mean obviously there are features that that you don't offer today that maybe if you offered would bring in a different segment of customers, would be something that you guys could market and really like sell to new customers. At the same time, as we've been talking about, there's all kinds of existing pain points for customers that you want to try to solve and focus on retention. So, I mean, we use this term a lot in vertical SaaS, like product led growth, but how do you think about that concept and the relationship between product acquisition and retention?
So just to make sure that I understand the question, you're talking about acquiring a new customer versus having that customer pick up a new feature or solution once they're already our customer.
Yeah, yeah, like kind of like because those are sort of in some ways I think two different goals you can sort of optimize for, and obviously
Yeah.
product needs to a degree service both. So how do you think about that?
One of the things that we see a bunch is when we're bringing on new customers, there's almost so much water that the land can take, just in terms
Mm,
of like I am already making a heart transplant moving from this point of sale to this point of sale. And
right.
while there's a bunch of features that I will eventually want, I don't want to do them all day one.
Mm,
So I think that's part of it. Like, we have an online ordering product that has a super, super high satisfaction rate, has a super high retention rate. But sometimes people are like, hey, like, what? I've never done my own online ordering. I've always done it through, Uber or DoorDash or whatever. And so like, let me get this thing set up, and then, a month in, come back, circle back, and like making it really turnkey for them to find it in the dashboard and say, hey, like I'm ready to add that. I think that aspect of acquisition is one where we can bring them on post. I think there's another flavor though. We've launched a product called Daycheck, and so what Daycheck does is it allows staff to effectively get their money the day of. So
mm,
I worked a shift. I was a bartender like you, Luke, and then at the end of my shift, I didn't want to wait a week or 2 weeks or whatever for that cash. One of the things that I really, really get excited about. Take the stat. I'm going to fix it in post, but I think the stat is something like 40% of Americans can't absorb a $500 surprise.
Yeah. Right.
And what I love about that product is, number one, the merchants don't have to pay anything for it.
Mm-hmm.
The customer only pays a small fee for getting their money, when they need it, and they don't have to do it all the time. And number three, any business that we can create that puts people that are predatory, like, again, like if you love your customer and you love what they're doing,
Sure.
their alternative right now is to go to a payday loan
Mm-hmm.
where they are going to hit them with something that is completely unfair.
Mm-hmm.
And I've told the product leader on that side, like, if I walk around and see a payday loan going out of business in a neighborhood that we have taken over, like, I will declare that victory, because
Right.
I love the people that are working there, and I know that that is a better outcome for them. And that's actually one where we have one business because of it, because of, I the POS might be close enough, but like my people really need that, and they care about their people.
Mm-hmm.
So they will become our customer. We will acquire them as a restaurant because of a feature like that.
It's so interesting, like the way you talk about retention for the SpotOn software. Like, just again, put yourself in the restaurant owner's shoes. Like what you just described is they have a hard time keeping and maintaining the same staff.
They have a
Right.
retention
And then
problem.
one extra
Yeah.
feature, like same day, like or early wage access or same day pay, that's magic, right? Those folks need the money now. They may need gas in their car or fix a tire. If they can't show up to the shift the next day, like they can't work. And you're
Yeah.
right. Like they'll go take whatever capital they can to actually like get their car back on the road if they have to, and sometimes pay stupid like things that just don't make sense. But the alternative is being out of a job, right? And so when you're focused on as you think about retention for your restaurants, like solving their problems, which is helping them like maintain staff. And like the way I always thought about retention is that it's, well, at least at Intuit and at Square, the second you add the second product, or the instant you add the second product, retention increases by 30 to 50%. Right. If you add the third, you're at like 90, you're at 80 or 90. It's like way higher. Like you're solving these pain points, and all of a sudden one more thing that's just as good, retention just starts to jack up, and then you just don't lose customers after a while. If you have several different magical things for them, like that product for their staff is awesome. Right. Like just to help them get paid and help them like get back on the road and come back to work the next day. Like all this stuff kind of layers back down. It's the same themes everywhere.
Completely. And the same is true for the businesses, as you know really well. Like, God forbid that their rent and their payroll hit the same day. And it's, what is their alternative? So, thinking about that whole restaurant ecosystem, from the owner to the staff to the guest, like that is one of those things where there's so many kind of fragile moments that you have to almost protect them against that unexpected surprise.
Yeah. A lot of restaurant owners will actually advance wages to their staff to say, hey, I need you to pay me for next week's paycheck because of XYZ. And they want to keep that employee. So they're just going to do it without even a contract, saying, fine, I trust you. You worked for me for a year. Here's the money. We can pay me back in the next paycheck. Right. It happens all the time. Right.
Mm-hmm.
Yeah.
Yeah, productizing it makes a huge difference. So building off of the day check conversation, Bryan, I'd love to talk a little specifically about embedded finance.
Yeah.
So within sort of the broader universe of vertical SaaS, can you give us a little bit of context on what SpotOn does today with embedded finance, and sort of how, I mean, you referenced this earlier when you were describing kind of the origins of the company, but how you got into payments and some of those other areas?
Yeah, absolutely. So, one of the things that Luke and I's old boss, CEO at Square, said, she said that that the payments revenue is what funds the software revenue, and people pick based on software. And I believe that. I believe that so much of the value that is created for restaurants is optimizations. It's things that allow them to run a better, healthier, more stable, more resilient business. And one of the things that is really interesting, I was talking to someone the other day who was saying, and why is there no business out there that is saying, hey, bring your own payment provider and then we'll just give you the SaaS? And the reason is because the required investments in R&D on the SaaS side are so significant that you need to be able to have that kind of cohesive experience. And then beyond that, there's so much stuff as we're a PayFac, for example, there's so much data that we can collect on the customer that will help not only the business that the customer transacted with, but also our entire ecosystem. And so for us, we kind of think of them as like kind of parts of a whole. And so we obviously we do the payments piece, we do loans, we do a bunch of stuff on kind of like the labor side. But at the end of the day, it's really the ecosystem, like the entire solution that I think makes it valuable for the restaurant.
Like the way I would reinforce this is that I've never thought that financial services by themselves are a product, right? The core product, the wedge, has to be something else, like the software, and the way, like the same way that Alyssa describes it, like it is the software. Like the rest of it is just a monetization lever at best,
Yeah.
and a pain point solver, yes, but nobody cares about accepting payment. It's like only having a Square
Sure.
like iPhone app and just swiping cards and trying to run your entire restaurant with that. Like imagine that. It won't work, right? It just won't. And so it's just the financial services are an excellent like secondary thing to just make everybody's lives easier and bring banking into the software. But by itself, like none of the neobanks have been successful on the small business side, right? Number one, because they can't acquire a customer directly because they have no like real value add. They can't monetize because they can't figure out capital. They all try to do debit interchange, but like being able to accept like card is not enough. Like it's just not enough to have a product, and it never will be. Vertical has changed everything.
And that's why like honestly, once a month, I have a friend who messages me and says, "Hey, so-and-so company is starting a POS. Like, are you worried?" And
Nope.
I'm like, "Welcome to the arena." Like,
Right.
I hope that your ability to invest and persist is significant because, exactly to your point there, Luke, someone saying like, "Hey, I'm going to give you interchange plus, some de minimis amount, and you're going to pick it because of price," massively undervalues the value that the software is bringing. And also the fact that like, 2.3 versus 2.4 is not worth it if I can't print to the kitchen, if I don't know when my staff checked in, if I can't be tax compliant. Like all of these things are part of the solution.
Well, and I think one thing that layers over top of that that's really important, and it kind of goes back to your discussion about how you narrowed your focus on a target customer segment over time, is I think the size of the business matters a lot in this respect too, right? Because as you get bigger, then you start to be able to have the resources to specialize in different modules or components of what you're doing. You can say, I've got this solved over here for payment processing. I really do care about getting my rate down to this thing. Like you can start to get optimization as a business on your own when you're bigger. But as we've been talking about, that independent, small business owner, that restaurant owner, they just don't have the capacity to be able to do all of that. And they really do want all in one, like solve as many problems for me as possible so that I can focus on the core task of running my business, not all these ancillary areas, right?
Yeah, 100%. And I think um, the thing that we see, imagine a neighborhood that you would roll into that is just two Chili's, a Subway, and a Wendy's. Like no one wants to live in that world.
I do
Uh,
not.
I do not. I definitely do not. And one of the things that we think about a lot is just this idea of how do we democratize technology? How do
Ooh,
we make it so that, maybe Darden has a financial analyst whose whole job is to, think about their protein costs, but that independent restaurant doesn't. Or, Chick-fil-A has an unbelievable team to give them a mobile app to make sure that the customers come back again and again and become, super red members or whatever. How do we make sure that your favorite restaurant has that same access? And it's kind of we talk about mercenaries versus missionaries. Man, if people want to live in a world with Chili's and Subway on every street, like they do not want to work at SpotOn.
right, right.
But if they care about that person, like they're going to come in Saturday, they're going to come in Sunday, they're going to do whatever they can to make sure that the independents are armed with the stuff that they need to succeed.
It's so interesting because there's so much more like depth in that statement, and that like it's pretty easy to open a Subway because they have the playbook for you, because here is the POS system you're going to use, here is the
That's
food
right.
that's going to be delivered once every week or 2 weeks. I'm not sure how many preservatives are in that food, but like
A
the
lot last
playbook
I was
is
there.
Yes, it's not even bread in some markets because there's too much sugar in it. That's a whole different conversation. But like, because it's so easy, you can go pay that franchise fee. You have something that works and you know it. The more SaaS vertical can take away the hard part of the entire back office. Like, if you can go to SpotOn and just take the whole system off the shelf and go run your entire restaurant, then you're thinking about menu, then you're thinking about food, then you're thinking about the experience. And like that, the hardest part of what it used to be, like, frankly, you needed a restaurant manager to help you. It actually democratizes the ability to go launch a new restaurant, because with one person now you can do it, instead of doing it with like 2 or 3 required in any other sense.
So I guess, Bryan, where I'd like to wrap up is getting your thoughts on kind of where we're headed next, if that makes sense. So first, before we sort of broaden out beyond the embedded finance component, I'm curious, just as you've gotten kind of deeper into the independent restaurant owner segment, what have you learned about how they make decisions, specifically about financial products or services, that has surprised you? I mean, obviously, we've talked about payments, we've talked a little bit about lending, we've talked about early access to paychecks. Like, what's an area within the world of restaurant finances that sort of surprised you?
I mean, I think a couple things that I would point out. Number one is, unfortunately, how susceptible some folks are to kind of smoke and mirror presentations.
Mm,
The what looks like a really good deal because your expertise is making sandwiches or you're running a restaurant, um, to someone who crunches the numbers, it's like, wow, that's actually a very bad deal. You should never take that deal.
yep.
And so I think that's one thing that surprises me. I think the other thing that surprises me is, for the amount of hours and effort and blood and sweat that folks put in, uh, how shockingly common it is for them to not know whether or not they're winning or losing.
Mm,
They don't know their profitability. They don't know the contribution margin of specific items. They don't know if they should kind of turn left or turn right. And I think that's one of those areas where they're just throwing more hours at it. They're just throwing, well, I'll work a little bit harder and we'll become a little bit more profitable. And it's like, well, you've been selling so much shrimp, and shrimp stopped being profitable for you
hmm
7 months ago.
hmm
And without a menu price change, or without, you doing a little menu engineering, like, more hours is not going to help you. And so that's the other part that is both surprising and in a lot of ways like motivating for us,
mm.
because we know that if they're armed with the right decisions and like the right data, that they can be successful, and they should be.
It's so interesting, like that specific example, because like that plays out across the entire business. Like, most restaurant owners probably don't know how to track all the invoices they're paying. They don't even really understand when prices are going up and down, like the money in, money out's happening. Like, they're not doing it all in one place. They have different tools, and there's no way to even turn on the AI like financial OS for a small business, because you don't have access to all the data. Like, the business that's going to actually succeed from a software perspective is the one that actually becomes the end-to-end thing for the business. If you have all money in and money out going through your platform at SpotOn, then and only then can you actually see the granular data you need to help them, like, understand, number one, cash inflow, cash outflow, get ahead of it with seasonality and data, but plus also say, and you know what, like, you're spending way too much on this dish. You either need to, like, here's 3 recommendations for changing it to actually make you more profitable. And this one change could actually give you 2 points of EBITDA, for example. But to have the AI to do that, you have to have all the data, and nobody really has it yet. Like, Intuit never really had it. We had the bank data, but it was only 85% accurate. And you didn't know if they linked all their bank accounts, right? It's like the holy grail for me, at least, is to have transaction level money in, money out, and then add the AI on top from just a like intelligence perspective to help them just make better business decisions. Like, Pipe's trying to do that. We just need partners that actually have customers that are doing everything in that one platform, right?
Yeah, I'll give you a really quick example. We launched a product this summer called Profit Assist, and what it does is it connects to people's QuickBooks or R365 or Xero.
Mm.
Um, and we have a business that's a diner in Tennessee, and we sent the AI. Profit Assist is an AI tool, and we sent the AI into the solution, and it found a error that was generating $400 a month of extra cost.
Hmm.
And 400, I'm sorry, I said that wrong. $400 a day
Holy
of
moly.
extra
Whoa.
cost.
Yeah.
Yeah. So you spread that across the year. And this was what ended up happening was some chef somewhere along the lines had changed the amount, the portion size for sides. So imagine hash browns were supposed to be 5 ounces. A chef changed the recipe to be 8, never told anyone. They've been buying tomatoes and potatoes and all these things. And the AI said, whoa, your spend does not match what your sales are. You got to go look at that. And I think, uh, Luke, to your point, a human who is dedicated to looking and analyzing every invoice and everything that came in and out and scrutinizing it, they might catch that. But they just don't have the time in the day to go and be a forensic accountant to be like, wait a second, I'm buying too many potatoes. And that's where I think data and I think really, really, really fine-tuned vertical specific kind of suggestions and recommendations are going to be super critical for folks in this kind of next era.
I love that example because like the menu itself are the ingredients. You have the invoices of what you're paying and buying, but you also have food waste, right? And so like connecting the dots end to end for that mini supply chain on that dish, like is not something anybody ever had time to do before. But for you to come in and say, well, for each dish, we have the analytics. And if you just do these minor changes, we can make you 25% more profitable. Like that's a magical experience if you guys can get to it. That's awesome.
Yeah.
Yeah, I love that example. So Bryan, wrapping up then, I'd love to get your take on just what's coming next. And I'd be curious both on a SpotOn level, just in terms of how you think about your product roadmap and kind of where you're going, but also broadly as you think about, I mean, you've obviously been in this space for a long time. Do you think the evolution of vertical SaaS and sort of this push and pull we've been talking about between breadth and depth, kind of where you see the market evolving? I'd love to get your thoughts on both those questions.
Yeah, I mean, I think for the restaurant space, we have some data internally that maps the minimum wage in every state over the last 25 years. And kind of think of it as like this is being overly specific, but let's say it's 32% of your cost is labor, 32% of your cost is COGS, and 32% of your cost is fixed costs. And so, food is in that COGS group. And then maybe you get 6% profit margin. I think the thing that I see coming that's really, really interesting is I think we are going to see data become a factor in optimization in a way that has never been possible before. Historically, the restaurant space was filled with these one-off consultants that would go in and they would help a business. And I think being able to do that at scale is going to be incredibly powerful and incredibly important for restaurants. And then the other thing I think is feels almost inevitable is because the prices for labor have gone up so much. I don't ever want to live in a world where it's just robots and things coming to my table, and no one wants to live in that world,
Right.
at least in my opinion.
Yeah.
But I think what we are going to see is technology allow restaurants to make their staff much more efficient, so that because I don't know a single restaurant owner who wants their staff to have a hard life. They want them to make more money. They want them to be successful. In a lot of cases, they're an extension of their family. And when you're running a business that's on a super tight margin, you need to make sure that the labor doesn't tank your business. And so, as we see technology allow a lot more efficiency from labor, I think we're going to see actually better experiences. More time with someone in front of you at the table, kind of more time with the manager not sitting in the back, scouring the books for $400 worth of potatoes that are missing. And more time like remembering your name and saying, hey, like I think it was your birthday last week, that type of stuff.
Well, that's the vision that I want to see happen. Speaking as someone who is a passionate fan of independent restaurants. Luke, I'll give you the last word as we close out this episode.
I was gonna say, like, having your name remember when you come back in, like, it just makes you feel like you're walking into a friend's kitchen, like that's the best. Although
Totally.
I have to say my kids do love to go to Bullet Train Sushi in the San Francisco just because of the novelty of having a little thing zip their food out, but that's just a very small, like, niche part. I would much rather have somebody like remember my name when I went in. I can't be more excited about like SaaS vertical in general across the board, just because in every industry, it's just helping these small businesses like spend more time with their families or spend more time in their business, like making their customers feel better. Like that's the future I want to live in. It's the best. I love it.
Absolutely. Well, Bryan, thank you so much for joining us for this episode. Really glad to get your perspective on this and carry forward throughout the rest of the series. So thank you for your time.
Thanks so much
Thanks,
for
Brian.
having me. And I'm looking forward to listening to all the episodes that come.
Awesome.